Hello, everyone. This is Steve, known on social media as Beyond the Trades, and also known as Steve in the equitiesetc.com trading community, as well as the microefutures.com trading community. Two rooms in one. One room, the microefutures.com or ES Futures Market Profile, and equitiesetc.com for stocks, crypto, options, and even NFT and sports betting. Two rooms in one. But enough of the promo. Just wanted to discuss and go over today in this video swing trading, especially in the type of market environment that we are experiencing right now. If you recall from some of my past videos, prior to last week, I was not in any swing trades for about 4 months because of the market conditions. And when I mean swing trades, I'm talking about short-term swing trades going long. So today I just wanted to touch upon not only a couple of concepts, but also want to go over some charts. I want to go show you some swing trades that I took last week. I also want to show you some trade idea swing scans, back-tested scans that are starting to alert to some possible opportunities going forward. Keep in mind, no one knows if the market will be reversing like we saw this past week. That will continue, or is it just short covering, bear market rally, or will we continue to go down? So I think that is a key that I want to state right up front. I do not know. I don't think anyone else knows. And I'm very leery of anyone that tells me with any shred of confidence that we know what the market's going to do. So what I rely on are the charts. What are the charts and price action telling me? Now, everything we're going over today is how I trade. Doesn't make it right. Doesn't make it wrong. Well, it makes it right for me because it works for me. But I really want the listeners or viewers to take the concepts and apply it to their style of trading, not to mimic what I'm going over, what works for me. Because I've yet to meet a trader that is successful, a long-term trader that has copied someone else's style. They've always formed their own style. Now that forming their own style might be a combination of different successful traders that they're using bits and pieces from to form their own style, such as myself. I mean, I would say my style of trading is heavily influenced by Brian Shannon, JC Parrott, Barry from Trade Ideas, three gentlemen that I know, that I respect, that I've studied their works over the years. I've been trading now 11 years. First 2 years, I lost. Most folks lose. I'd say the past 9 years, I know I've been successful, very consistent, paying taxes. That's how I describe successful trader. Are you paying taxes at the end of the year on capital gains? But so one of the things I wanted to touch on before we move into swing trading is I reviewed in the equitiesetc.com trading room that I hang out in daily with the members, my statistics for May. Now I'm talking day trading. And one of the things I noticed was my win rate for May was 57%. Now, people will say a 57% winning percentage doesn't mean anything, and they're absolutely correct, because at the end of the day, what really matters is our P&L. But even digging deeper than the P&L, what really matters is not only what we learned, especially if you're a new trader, what you're learning. To me, it's probably more important than P&L, because you want to learn concepts that you will take for the rest of your life. So don't judge your monthly performance based on your P&L if you're new. Base it on what you learned, concepts that you can take for the rest of your trading life. But what I learned was my profit factor was 5.7, and that's a pretty decent profit factor. For you risk reward R&R types of folks, you can equate to what a profit factor of 5.75 is. So I consider personally anything above 3 as being good. But you got to ask yourself, man, 57% win rate, that sounds good. A profit factor of 5.75 sounds good. Sounds like you had a really good month, which I did. But 57% win rate means I lost on 43% of my trades. So if I took 100 trades, and I know I took a lot more than 100 trades. I'll just use that as an example for day trades over the month. If I took 100 trades, that means I lost on 43 of those 100 trades. That's a lot of losing, a lot of losing. So if I had all that losing 43%, right? Now I realized I had an edge because my win percentage was 57, but how did I have a profit factor of 5.75? I can, looking over my trades, I can tell you it wasn't because I was real good on my winning trades. My winning trades, I had the normal, win dollar gain that I've had in past months. What stood out to me was I was a real good loser on the 43%. That my month was only good because I was a good loser. I was able to keep my losses extremely small according to my playbook strategies, which I adhere to on those 43% losses. So the key wasn't I was this really good trader, as I explained to the room. I really wasn't. I was just a really good loser. And that's a concept I know a lot of you really need to really think about. Think about this for a second. For your month of May, right? If you took out those bonehead trades, the 5, 6, 7, whatever that might be, bonehead trades where either you went in a trade you knew you shouldn't have, you held overnight when you knew you shouldn't have, you moved your stop when you shouldn't have, you should have got out of the trade when you needed to, or you cut a winner short because you were afraid and you wanted to lock in profits, even though the chart told you to stay in. Okay, but let's talk more about the losers. If you eliminated those 5 or 6 or 7 boneheaded trades, how would your month look like? If you pulled out those trades, I bet you for many of you listening right now, your month of May probably was pretty good. So my advice for day trading for the month of June is focus on becoming a good loser, the best loser out there possible. Because I'll tell you what, your winning trades are going to happen. They're going to happen, right? Where you need to focus on is your losing trades and eliminated those bonehead trades. So become a good loser is really what I'm trying to say. Because if I wasn't a good loser in May, I probably would have had a losing month in May, personally myself. So enough of that day trading rant. Let's talk about some swing trading opportunities. First, let's take a look at some of the swing trades I took last week and why did I go into swing trades last week. Let me pull the SPY up for a second. And this is a daily chart we are looking at. So last week, we were probably around here, all right? First off, I do not know if the market is going up or going down long term. What I did know, okay, was at this bottom area, right, is when we hit that phantom bear market level, okay, which to me means nothing but one thing, and I'll explain what that one thing is. Meaning, a bear market is considered when price drops 20% from its recent high. So when the SPY has dropped 20% from its recent high, that's officially a bear market. And we hit that where you see my arrow going around. Now, in my mind, we've been in a bear market for a long time. I didn't need it to hit the 20% mark to tell me that. That's why I haven't been in any swing trades for, what, 3-4 months. Okay. But I knew, okay, based on past experiences, that a lot of people look at that 20% bear market range, and that was going to be a level of support, okay, that if that level of support was broken, we would continue down. And it very well might still be broken, okay, and we continue down. But we did rally from it. So we had a lot of eyes and a lot of machines meaning algos, looking at that level. And then you saw that we started coming back up. So what I decided to do last week was, okay, let me look at some sector leaders in my mind of companies I feel, okay, will have a good chance of eventually, and it could be a long time, but eventually getting back to their highs. Okay, so stocks that are, I believe in to be strong companies, doesn't matter why, okay, in sectors, okay, that I feel can rally in a bull market to get back where they were. And that I was only going to put in no more than 20% my normal size in each trade because I'm just not confident in the market. Should the market want to continue going up, okay, then I have 20% and I can always add as we get a better confirmation that maybe we are going to be in a reversal. Now, what am I looking for to see if we're possibly coming out of a downtrend, right? A couple of things. For me, on my daily chart, I like to use 4 key moving averages. And I've stated this in previous videos. And again, it could be whatever moving averages you use that are comfortable, that works for you. Okay, it doesn't have to be mine, but I use, okay, and we'll use right here, the cursor blue is a 200-day moving average, which is a long-term moving average, 200 days, which I believe many of you use. The maroon, where the arrow is up here, is a 50-day moving average, another long-term moving average, which I believe many of you use. I also put 2 shorter-term moving averages on my daily chart for swing trading. The green, which is the 20-day moving average, 20-day EMA, and orange, which is the 10 EMA. So to repeat, I use the 10 EMA, the 20 EMA, the 50 SMA, and the 200 SMA as my moving averages. I like to see, okay, price above at least 2 of those moving averages. And really, reality is 2 of those moving averages most likely will be the shorter term moving averages, the 10 and the 20. So that is one key I like to see in a reversal, but it's not the only key, because if it was the only key, the SPY right now is above 2 of its short-term moving averages. We can really say, well, then we're in a reversal. Let's go. Let's jump back in 100% and not 20%, and let's add some more swing trades. No, not at all. Because we've been in such a downtrend in the SPY, I need to start seeing higher lows. And I was explaining this concept to my wife. Okay, so what is a higher low in these candles on the daily chart? Notice we are rallying this past week. Okay, let's expect a pullback, because recoveries typically don't go straight up. So let's expect that we're going to have a pullback, right? When we pull back, what I will be looking for, and follow my cursor as a pullback, are we going to pull all the way back to the previous low and then some? Because if we do, very bearish. Or are we going to have a higher low? Are we going to pull back maybe to here, right? So it's a nice pullback, right? Everyone thinks we're in a bear market, but then we start going up again. Follow my cursor. And then we pull back again, but we don't pull back. It's a higher low. We only pull back to where my cursor is now. And then we go back up again where my cursor is. Then we pull back down again. Okay, but not all the way back down to the previous low. And we pull back up again. That is higher lows. That you get a few of those together, you can get more comfortable that maybe we are officially getting out of this bear market and going into a reversal. So for me on the SPY and even the Qs for growth tech stocks, I'm going to be looking to see on this next pullback in the SPY, how far down are we going to go? Because if we don't go all the way down, that's a good sign. And then we come back up. Now, I'm not saying just one higher low means we're in the clear. No way. I want to see several of them. But I think you get that concept. Now, if you don't get that concept, and it's the key concept of higher lows, All right. Obviously, you can Google it. You can research what it means. You can also feel free to DM me and I can explain it in more detail. So those are the two things I'm looking for. All right. Are we above at least 2 out of the 4 moving averages, right, that you use on your daily chart? And are we starting to experience not one high or low, but several high or lows? Now, it doesn't mean you can't go in small shares like I did, right? So let's talk about what I went in. So let's say I went in 5 days ago, right? I think I probably went in about 6, 7 days ago. So we lose, and you can see that based off me feeling, right, that, we were going to have a bounce off the bear market area, I'm getting pretty good returns on my 20%, right? 20% of my normal share size. So I'm in light, not in anywhere near close to my full size in these, because I can always add as the confirmations happen. So why am I in the Jets? Okay. Well, besides being a big New York Jet fan, I'm in the Jets because of the airline industries, right? And I feel that the airline industries are not going away. They're simply not going away. That the airline industries, I don't want to have to pick a specific airline because I know specific airlines can survive. Specific airlines can also not survive. So I'd rather get in the industry of the airlines. I went into Jets ETF. Citigroup, I wanted exposure into the financials, right? I did look at the ETF for the financials and the banks, but I didn't see enough upside. Remember what I said prior. I'm looking for stocks that if it makes its previous high, if we ever get out of this bear market, is going to give me a great return on my investment, right? Because I do plan on adding more to my 20% holdings as it goes up. So look, I see great risk reward for Citicorp. Okay, we'll talk about stops and exits when I start looking at other stocks. But so I just wanted to explain why I'm in the trades that I'm in. I see good risk reward there, right? Obviously, for those of you who will say, well, where would you get out? I would look at the moving averages right there, right? If it starts falling beneath 2 of the 4 moving averages, so it falls beneath the 50-day moving averages, it will now be under the 200, under the 50, I probably exit, okay, and take my profits. And CNQ, natural resources, energy, okay, is a stock that I feel has not only good opportunities, look at how it ran up, all right, it pulled back. Not only do I feel that it can reach its previous high, I have confidence that it can continue to go even higher. Again, my stops be below these moving averages. See where my entry was down here in this blue line. You can see I'm enjoying a nice run up here. That's CNQ. AMD is the semiconductors, the microchips. Right, AMD I feel has great reward for me getting up to its previous high. PLTR, beating down stock, a lot of stock options, folks with cheap shares of stock options sold off, took their profits, but we're seeing PLTR, which is in the cloud analytics industry. They're a solid company, decent revenue. I love the risk reward. I believe this is a company that will be around for a very long time. It's beaten up like most tech growth stocks are. It moves with the cues. And I just see this as a very good opportunity in the cloud analytics sector space. United Steel's been around forever. Infrastructure, steel industry, steel sector, great risk reward. United Steels is not going anywhere. That's why I'm in United Steels. Love them or hate them with Tesla. I feel Tesla, I want to have exposure in the EV, electric vehicle marketplace, and I feel Tesla is the leader in that industry. Are they overpriced at 700? Could be. We can argue that. It really doesn't matter what you and I think. It is. It's just what price tells us, and I know their previous high was up here around 12, 1300. I see Tesla also not going away as a company that's going to be around for a very long time. So I started adding slowly back in Tesla. So that's why I'm in the swing trades that I'm in. So going forward, what swing trades do I look for to possibly add to that list you see here, right? And when I'm looking at swing trades, it can also possibly give me excellent day trade opportunities, right? So it's not just swing trade, right? I'm not actively looking right now to jump back in swing traded because I don't know if the market is done going down. Yes, I was in some swing trades, but notice they were all sector leaders. All right. A lot of these stocks we're going to be looking at on these scans now are not sector leaders. So these would be short-term swing trades if you decide to trade them. Most likely, I probably won't, but I want to go over them. I may as short-term swing trade, I may as a day trade. So the point is, I am not actively looking in. So we'll set some price alerts. Doesn't mean if that price alert triggers, I am necessarily entering. Never means I'm entering. I'm always looking at the market that day, the price that day, and what the charts look like. So the first scan that I look at, which is my trade idea scan that I custom coded, is swing the 10 EMA watch list. So what is the swing the 10 EMA watch list? It's a strategy I have. Now, I've done other videos. It's on the BeyondTheTrades YouTube page. So BeyondTheTrades YouTube page, you can find them on my strategies, my playbook. And also if you're a member of the equitiesetc.com or microefutures.com trading room, I have a whole channel room with my strategies and playbooks. You can review the videos on each specific strategy there. So we'll just do more of a macro look of them. But the scan alerts me to possible setups to consider based on that strategy. Now, not every alert are we going to play. In fact, most alerts we won't. But this scan is doing us the legwork, reviewing over 10,000 charts nightly to find out the setups that apply to the strategy in question. So they're doing all the heavy lifting. So I personally don't have to look at 10,000 charts every night, which we all know we wouldn't do, maybe a few hundred at the most. So the scan is doing all the heavy lifting for us. And in today's day and age, you really need to have some sort of software that is finding you the setups according to your strategy for you to consider. I'm not saying to blindly follow them, but let it do the legwork and follow them. So the first one we want to look at is LTHM. The whole concept of swing the 10 EMA is we want to find stocks that are smoothly, right? If you don't have access to my strategy video, smoothly riding up this orange line. So the first thing I look at is, has LTHM in the past smoothly ridden up or down the 9 EMA? And I'm looking at this stock and all I see is a bunch of wicks and a bunch of mess, right? So it's not even a consideration to me. I could care less that it spiked that high. I'm looking for stocks that are smoothly trending up for consideration. Let's look at TS. TS, you can see, is a little bit better. You can see it somewhat trying to honor the 10 EMA. Okay, but it's not totally clean. We skip over TS. Now, I have not looked at any of these, right? From these scans. These scans are from the current scans, right? I'm recording this on Saturday, May 28th. So I have no idea if we're going to find any good ones to possibly take or bad ones to take. All I'm doing is going through a trade review that I do, or chart review that I do for myself. So had I not been recording this right now, I'd be doing this anyway. I'm just doing this on recording. All right. Nope. Again, same thing. I just don't see any smooth trend up in EMA. HRB, same thing. Mess. And this is to be expected. Why? You could say, you can argue here, well, it's starting to trend up. It's really not. Look how far away it is. It's just really just spiking up, right? You might want to trade it as a momentum play. That's up to you. But as a swing to 10, right up the 10 EMA, absolutely not. Now, why am I using the 10 EMA? The day traders know we use the 9 EMA for the day trading, but for swing trading, we use the 10 EMA, or at least I do. But choppy, not interesting. And that's to be expected because the market has been a choppy market all along. Same thing. For this strategy, no interest. CTE, same thing. Look at it. See no smooth trends, no interest. Halo, same thing, no smooth interest. NRG, same thing, no smooth interest. And ACGL, no smooth interest. So as of today, going into Saturday, the weekend, Memorial Day weekend, there are no swing to 10 EMA type of strategy setups that I like, that I would consider setting price alerts for potential trades. Let's look at another scan. Now this is called a trend change pro reversal scan. So this scan, and you see a lot of alerts on this scan, finding stocks, at least according to the strategy and back testing, that should be starting to reverse from their bottoms. That might catch our interest. So let's take a look at it. LMND. Let's look at LMND. You see that it was basing, starting to break out, and it's butting heads on the 50-day moving average. So let's ask ourselves those questions we talked about before when we were discussing the SPY. What do we look for on our daily chart for swing trade? We have 4 moving averages. We want to see price above at least 2. We see that price has gotten above 2 of them already. Price has gotten above the 10 and the 20 EMA, but it's butting heads right now with the 50-day moving average, which can and probably will act as a support. So I expect a battle to be happening at this area of resistance, the 50-day moving averages. I also then want to say, well, what happens if it breaks through the 50-day moving averages? Does it have the potential to make a run towards the 200, which is a nice move? Then I will ask myself, I don't use fancy terms like balance zones and cost basis and, all that fancy stuff. I just let the visual give me that same information, because really all fancy words are just support and resistance areas. That's all it is. So we're looking for support and resistance areas, to keep it simple. Is if it breaks through the 50-day moving averages, look left on the chart. Do you see congestion or possible resistance? And I do. And then I do more here. So I don't see this as being a surefire swing trade, because if it gets past the 50, it's going to still have to get passed through all this congestion. Okay. All right. So I would not set a price alert for LMND. Let's look at VUSI. All right, VUSI. Yes, it not only went above 2 moving averages, it went above the 3rd. It broke through that 50-day moving average. All right, but let's look left on the chart. And what do we see? More congestion that has to do. You can make an argument. Let's set a price alert for VUSI, and we will, that if it clears that congestion, how easy it is to set a price alert. Clears congestion. Bam. And now I have a price alert. And now what will happen is, when that price alert gets hit, it will appear on this scanner monitor. The scanner monitor is up, lets me know whenever my price alert hits, and it has a audio sound. So the audio sound, so I don't have to be watching the screen at all time. In my home office will let me know that an alert triggered from one of my price alerts. So let's see. Just want to show you how easy it is to set a price alert on my chart. And by the way, with the Trade Ideas auto brokerage with E-Trade, I use E-Trade Pro as my broker. I can actually place trades directly on my screen with a click of a button. Click it and it automatically makes the trade through E-Trade. It's really key. I think the key for me with that is it speeds up my executions much faster than having to type this stuff in my E-Trade screen. Well, there you go. There's a price alert we set. Let's look at Sava. Sava. All right, you guys are going to say, well, this is so easy and so boring, and he is not using fancy words. Yeah, exactly so. How I trade is very simple and very boring, but it works for me. know, you don't have to complicate things. You don't have to assume 50 million things are happening behind the scenes. You know, think support resistance. I mean, that's the key, right? Everything else is just fancy words. So we're above the 2 short-term moving averages. And yes, a lot of these are going to look alike, the charts, because it's coming from the trend change pro reversals. The scan is programmed to find us charts and setups that look like this. So the question is going to be here is, look at it. It went above the 10 and the 20 EMA and then started consolidating this week. So it's testing all week the 50-day moving average. Is it going to break under and fail again? Or will it go above it? Okay. Realize the market's going to determine a lot of these chart movements, right? Because 3 out of 4 stocks will move with the market. So if the SPY's going up, 3 out of 4 stocks will go up with the SPY's tanking, 3 out of 4 stocks will go down. Keep that in the back of your mind, folks. You can have the greatest swing trading looking chart, you know, that has all the potential in the world, but the potential simply means you haven't done anything yet. Bill Parcells, a former NFL head coach, would say. Because if the market's tanking, your good looking swing chart probably going to go down that day too. So keep that in the back of your mind. If you're entering a short-term swing trade, it's probably going to move with the market that day. So you might want to ask yourself, what do you think the market's going to be doing? Okay, based on the chart, not your gut feeling, or based on something you read someone on Twitter said. I get such a kick out of people. People will just take what anyone says on Twitter and think that it's fact. Someone will say, oh, he's a really, really good trader on Twitter, and they don't even have a clue if that individual is actually paying taxes on his trading or whether he has a positive P&L. They just think he's a really good trader because he got a lot of followers or he posts really fancy stuff. Or she, there's a lot of she's out there too doing the same thing. And I'm not knocking anyone. That's just in general is, guys, you determine whether you're entering or exiting the trade. You determine if the charts are telling you what you need to know. Don't be influenced by anyone, including myself, JJ, Ray, or anyone else. All right, so back to Sava. All right, we're going to look. If it breaks above the 50-day moving average, let's look left. So let's say it does break above the 50-day moving average. Let's look left. Really don't see much congestion until we get up here, right? Right? To the $38 level. So you can give an argument's sake that says that if Sava breaks and holds, it's a potential break and hold 50. It's a good price alert, possibly a good swing trade for us. See where I set the price alert, right? I want to move it down a little. How easy it is for me to move. I want it just above the 50-day movement. Now remember, guys, we're not talking about an intraday intraday wick above the move. We like to see it close, right? Remember what we always said. You know, it's a daily chart. You wait until the daily chart closes. I would wait until the end of the day, around the close, or actually at the close, to see if the price alert triggered, if I would want to enter this or not. Just because it enters it breaks above the 50-day moving average at 12 o'clock in the day does not mean it's going to close above the 50-day moving average at 4 o'clock. It might close back under. Let the candle close. I always say that. Same thing if you're trading intraday, day trading. You're using a 5-minute chart. Let the candle close before you make a determination, unless it's completely obvious to you that the thing is running in either direction. You know, that's why you're looking at a daily chart or a 5-minute chart, right? Because you're waiting until that candle closes based on its historical past. So we set up price alert for Sava, EVGO. EVGO, you know, what catches my eye with EVGO is all these wicks. I just hate wicks. I like smoothness. I know that I could be totally wrong and I could totally be spotting a potential good trade, but I move on from that based on WeWork. Wow, WeWork. Are they still around? Guys, I just watched a great documentary. I think it was on Hulu on the cult of We, right? The story of how Adam Newman and Rebecca Newman, his wife, not only founded WeWork, took it to as a private company, a $47 billion valuation through venture capitalists before it all crashed on them prior to an IPO. An IPO that obviously eventually did take place. But if you really want to understand how venture capital works leading up to an IPO, the real legit way companies do, and not penny stock scams that you hear JJ talking about all the time, which are interesting in itself. But I'm talking about a legit company, the process of them getting venture capital while they're private several rounds, and the dynamics of working with a board of directors and then taking it public. For the cult of we, read the book also, fantastic, but it's a great, I think it's an 8-part series on Hulu. So let's look at WeWork. Okay, WeWork, I mean, I don't like that big wick that pulled back, right? But it looks like WeWork is trying to come back, right? I just don't like this consolidation so much. It's above all of its key moving averages. You might ask yourself, well, how come it doesn't have a 200-day moving averages? Well, I think because it went public not too long ago, finally, at valuation, I think around $3 billion. Market $5 billion now, so market. Right? So you could say it's above all its moving averages. It's running away. If anything, I would say this might pull back. It could be because people are starting to go back to work. A lot of individuals might be hiring this shared office work environment that WeWork has, and investors could be looking into it. Now, whenever I start talking like that, that means I have a zero edge, and I'm just guessing what could be happening with price on the chart. When I'm guessing or thinking something could be happening, like I just mentioned about WeWork, that's usually not a good idea. Let's look at rocket companies, RKT. Nice, right? Nice little bounce, started moving up. It broke through 10 and the 20, two of the moving averages. If we look left, it broke through the congestions, or it's in the process of breaking through the congestion. Now wants to break through the 50-day moving average. At $10, which is a key area, not a bad price alert. Is this because you look left, you still see some congestion. So it would break above. You can even have it a little lower. I mean, you can possibly start looking at a little bit lower, but I know that $10 mark, I love whole numbers, because whole numbers in itself, especially like 5, 10, those types of whole numbers tend to be built-in resistance and support themselves. So I would set a price list at 10 and check out the price action if it hits it. Notice, guys, we're starting to see some potential plays coming in. Let's look at the skin beauty company. Another one reversing. The only thing I don't like about the skin is all this congestion. I like it up here. I like it at 20. See why, guys? Because if you look left, you don't see as much congestion, right? That's why I like it at 20. You look now, when it breaks to 50, it's still got to get through all this. Now, what does this mean? I mean, JJ talks about it in different terms over in the ES room. What it means is you got a lot of people with shares around this area that might be looking to unload. Okay, so you got to get through this selling, right? So I would probably wait until I'm okay. I'm not even going to set a price alert because nothing can happen. Hopefully this is making sense. Same concept on LCID. Boy, LCID, the Lucid Group, has been a real good day trading stock. And in fact, as a day trade, I could see it going to the 50-day moving average. Keep an eye on this on Monday. Okay, but as a swing trade, no, because you still got all this. And also, I know the history of Lucid, and I also understand very volatile ups and downs in these candles. I don't want to get involved in stocks that are moving that drastically. That's why I mentioned it. It could be a really good day trading stock. It might make its way to the 50-day moving average. Right? You're a day trader. Keep an eye on this. Run. Okay. Solar industry. Interesting chart. Okay. Interesting chart. It might make a move to this area. Let me show you how I would mark this up. It's above 3 of its key moving averages we talked about. And let's look left. I would consider this not congestion, right? Because it's an actual trend down. So a trend down usually can mean a trend up, right? I could see it going, making a move. This is an interesting chart. You might want to, had a really good day on Friday. So I would expect a pullback to the 50. So I would play run. Now follow me on this. I wouldn't look to play a break of the high on Friday. I look to play a pullback to the 50. So since run had a really good day on Friday, it's very possible it will pull back to the 50. If it pulls back to the 50, look at the 50, what it does at the 50. If it bounces off the 50, it could make a run up to where I put that horizontal line. So what my price alert software allows me to do is to set a pullback. Look where I set a price alert. Yeah, it could go backwards. So my price alert now will only alert me if it pulls back towards the 50. And then when it pulls back towards the 50, it alerts me and I can take a look at what is it doing at the 50-day moving average. It's going to bounce off the 50-day moving average. This is not a bad day trade or swing trade up into around the 30-day area. Again, all depending on what the market is doing. All right, I'm assuming the market's going up on these swing longs. If we are in a tanking market, all bets are off, okay? Because 3 out of 4 stocks will go down with the market. Keep that in the back of your mind. And also keep in the back of the mind, if the stocks market's going up one day and you enter it and you got a good looking swing trading chart, it can go down the next day, the stock market. So will you swing trade? That's why you do not go in heavy, okay? You do not go in heavy because there's just no consistency in this market yet. All right, so that's why you see me in only 1/5 my side in those swing trades we reviewed before that I'm in, because I have no confidence the market's going to continue to go up. And I know that despite those charts of stocks that I am in looking good, that if the market goes down, so will they, right? Stamp that, okay, in your head. AI, okay, I think by now, if you guys were on mic with me, you could probably tell me what I'm about to say, which is it's above 2 of its moving averages. It's breaking over 1/3 of its moving averages. We are going to look left on the chart. Do we see a trend or do we see congestion? Trend, remember, we don't mind trends because we can move up trends. We don't want to see congestion, and it does have somewhat congestion right here, right here. Congestion that it has to get through, no good. I'm not interested. Let's look through Kill AI. See, without even looking, I'm just looking at all these wicks and how ugly this chart looks. I'm going over it. Okay. Here's an interesting chart. ETAS. Interesting because right now it's above 3 of its moving averages. Here's a good example. When it broke above the 50-day moving average, which is its 3rd moving average, and we looked left, you see congestion, right? Look what happened to it on Friday. Didn't keep going up. It started battling. It started slowing down because of this congestion. This is a good reason why we just don't enter it when it's above 3 of its moving averages. We look left on our charts. We look left on our intraday 5-minute, 1-minute charts also. Stamp that, all right, on your head. Look left constantly at the charts for resistance, okay? And here, you see when it broke to 50, we look left resistance. That's why we would not have entered it on Friday. Sure enough, the price is pulled back down. So there could be a battle, right? This could act as support and come resistance and come back down, or it could break through. Now we do like it breaking through it, right? If the market's going up, we set a price alert right there. Because if it breaks through there, it's still got this congestion, but they still make a $1, $2 run before we hit this congestion. So I'll say it did break where I put the price alert. I would probably stay in it for, you know, $1, take my profits, and then wait for it to clear. So this is more of a short-term swing trade if it breaks that area. All right, I think we're pretty much, I'll save you the boredom of going through the rest of these on this scan chart because I'm only going to be saying the same thing over and over again. I know you guys are probably getting a little bit bored of that. So those are the key to strategies at this time I'm looking for in swing trading. So I have others, but those others are more when we're in a trending market, meaning a bullish market. I think there's going to be unbelievable generational wealth opportunity when the market eventually goes bullish to really make some money in certain stocks by swing trading. You just have to be smart, know what you're doing. I don't want to confuse a lot of the new traders by adding those strategies right now. I'll do another video when we get in a bull market, what I'm looking for. But for the type of market we're in right now, this is what I'm looking at. And again, you might want to listen to the beginning of this video when I talked about the SPY and lower highs, excuse me, higher highs, and what I'm looking for and how I'm sizing myself and where I'm placing my stops. Now, where would I place my stops on all of these? It's real simple. If we're entering above a certain moving average or price alert, my stop would be right below it. Very low risk, right? So if, you know, if I said, okay, and I'm not setting a real price alert here. If I said, okay, I want a price alert. If I set a price alert here for this stock, right? I would enter above it on a close, on the daily close, but my stop be right below it. Keep the losses small. Same thing, if you're entering above a moving average, your stop's right below it. At the close of the day, at the close of the candle. Now, mentioned earlier in this how I was a good loser in the month of May on my day trades, right? And I'm a good loser because I day trade the same way, right? What you're really looking for is an entry above that's nearby where your stop's going to be. But you also have to understand your stop has to have some logic to it. Your stop isn't, well, I don't want to lose more than $50, okay? Your stop has to be where your trade thesis is proven wrong, okay? Now, if you need to scale down in share size because you only want to lose $50 per trade, I'm just using that as an example, then you see where your trade thesis is proven wrong underneath, okay, a certain level, right? You see where your entry is. You see the difference between your entry price and your exit price, right? And then you share size accordingly. Should your stop get hit, it's only going to lose you X amount of dollars, $50 if we're using that as an example, right? So not all your share sizes will be the same or dollar amounts per trade will be the same. It will be based on your risk. Okay? That's the key. I see a lot of people set their stops at, well, I just don't want to lose $50, but their trade hasn't been proven wrong yet. Their trade can still go correctly, okay? Their trade just simply hasn't proven wrong yet. That tells me they needed to adjust their share size smaller to allow for that wider stop, so they still only lose that $50 should they get stopped out. You don't just have a certain number and say, whoop, I lost $50, I'm out. That's it. And then you look at the chart and the chart's telling you, why are you out? No, that's telling me you're in too big. Lower your share sizes. So understand that concept, okay? Wherever your stop is, distance-wise, adjust your shares so the max amount of dollars you want to lose, all right, is realized only when your trade thesis is proven wrong. So with that, I think I preached enough. Have a great Memorial Day weekend, everyone. If you need any assistance, feel free to DM me. I appreciate everyone in the microefutures.com side of the house that have been direct messaging me, looking for some help in setting up strategies, playbooks, and the emotional side of trading. I love hanging out, trading with the team in equitiesetc.com. That's our stock trading room. We have an unbelievable team there that collaborates together on trades real time. It's pretty cool. It's really neat, fun, educational, and pretty profitable. It's great being part of something bigger than yourself when you're trading. So the equitiesetc.com room is offering a free 30-day trial if you are not a member already, but it's only for Memorial Day weekend. So if you want a free 30 days trial just for the equities ETC stock trading room, I'm in it daily, Ray's in it daily. A lot of really good traders are in it daily. Now's a chance to check us out free the next 30 days. So with that being said, I'm going to get out of here. Wish everyone a great Memorial Day weekend. God bless. Count your blessings and always have gratitude. Take care, guys.